Welcome back to the Daily Dive, your go-to for making sense of the markets.
Yep, and today we have a ton to unpack. We're talking about the dollar's crazy surge, the massive split we're seeing in corporate earnings, and of course, a look at what's really happening in crypto. Let's get into it.
Okay, first up, let's talk about something that's got everyone's attention, the US dollar. It is on an absolute tear right now. And then we're diving into this really interesting story playing out in the corporate world. It's kind of like a tale of two markets. Some companies are just soaring, while others are hitting some serious turbulence. And you're definitely going to want to stick around till the end. We're trying something a little different, a little fun, a peek at what the stars might have in store for tomorrow.
That's right. It's our brand new investment fortune segment. Just a fun way to wrap things up.
Okay, let's get right into it. First up, our macro movers. We're zoning in on the two biggest stories dominating the big picture right now, that powerful dollar and the rising price of oil. So just look at this chart. It really shows you what's happening. The dollar is flexing its muscles, especially against the Japanese yen, hitting levels we haven't seen in months. And what's really wild is that this is happening while US inflation is actually cooling off. You'd think it'd be the other way around, right? It is pretty counterintuitive, but this quote here really nails why. It all comes back to the Fed. All eyes are on the Federal Reserve, and the market is betting they're going to stay hawkish. What does that mean? Well, they're probably going to keep interest rates higher for longer to make sure inflation is truly beaten. And when US rates are high, it makes holding dollars more attractive, so boom, the value goes up. All right, let's pivot to the other huge macro story, energy. I mean, you've probably noticed it at the pump. Crude oil prices have been rallying, and that has ripple effects across the entire economy. So what's behind it? Well, it's not just one thing. It's a perfect storm, really. You've got ongoing geopolitical tensions, think the Middle East and Russia, that are making people nervous about supply. At the exact same time, demand forecasts are actually being revised up. So you've got this classic squeeze, potential for less supply, and a definite need for more demand. That's a recipe for higher prices. And that hits everything, from what it costs to ship a package to the price of your groceries. Okay, let's zoom in from that big macro picture down to individual companies. As earnings reports are rolling in, we're seeing this massive divide in the market. It's not one single story, it's really a tale of two completely different sectors. Yeah, and this slide lays it out perfectly. On one hand, you've got big tech. They're just crushing it, reporting stronger than expected results, a lot of optimism, green arrows all around. But then you look over at the industrial sector, and it's a totally different story. They're facing some serious headwinds, and you're seeing that reflected in their numbers. It's such a great reminder that you can't just look at the overall market and think you know the whole story. You gotta peel back the layers.
All right, time to switch gears and talk about the world of digital assets. Now, Bitcoin usually steals the show, but lately, it's been kind of quiet, surprisingly stable.
That's a great way to put it. It seems to be in this consolidation phase. After all that crazy volatility, it's just kind of moving sideways, not making a big move up or down. But don't let that fool you into thinking the crypto space is boring right now. The real action is actually happening elsewhere, in what's known as altcoins and DeFi. And since you brought up DeFi, let's just quickly define that for everyone. It stands for decentralized finance. The simplest way to think about it is financial services like lending, borrowing, trading, but built on blockchain technology, without the traditional middlemen like banks. We're seeing a ton of fresh interest in these kinds of projects right now. But, and this is a huge but, for anyone investing or even just watching this space, this is probably the most important thing to remember. Regulation is king. Any piece of news, any hint of new rules from governments anywhere in the world, that's what's really moving the needle for the entire market, from Bitcoin all the way down. Okay, for our last big market story today, let's turn to the bond market. It might not always be the flashiest topic, but right now it's incredibly sensitive, and honestly, it's telling us a ton about where the economy might be headed. Absolutely, and this table breaks down a pretty complex subject really nicely. So bond yields, that's basically the return you get on a bond, are jumping all over the place. And why is that? Well, they're reacting instantly to every little bit of inflation data and every single word from central bankers, both here in the US and over in Europe. The bond market is essentially playing a guessing game. When are those rate cuts finally coming? And how that game plays out has a massive impact on stocks. So with all this back and forth, all this uncertainty, it really begs the question, how do you find an edge? Well, we have one final idea for you, and it's, let's say, a little out of the box. That's right, it is time for our investment fortune segment. A little look to the stars for some market guidance.
And we have to put a big disclaimer here. This is purely for fun. Please, please do not base your financial strategy on this.
Okay, so for tomorrow's trading, it looks like luck is on the side of anyone born in the year of the dragon. The outlook is a bullish surge. The stars suggest your decisive energy could pay off. But the advice is timeless. Trust your gut, but always, always double-check the data. Now, for our rabbit friends, a little word of warning. The stars are pointing to a potential bear trap. That means you'll want to be on the lookout for any sudden, tricky market shifts. The advice here is to be extra cautious. It might be a good day to just hold steady instead of making any big, aggressive trades.
And on that note, that's all we've got for today's Daily Dive. A huge thanks for tuning in. We'll see you next time.